often receive questions from our clients about Harding Loevner's views on ESG. And while ESG can mean different things to different groups of investors, at Harding Loevner we tend to think of ESG as a framework for taking environmental, social, and corporate governance criteria into account in our investment process. When answering our clients' questions, I think that there are 3 key points to bear in mind. The first is that Harding Loevner views ESG as sources of risk to consider when evaluating potential investments, but not as a set of goals to be pursued at the cost of lower returns or potentially higher portfolio risk. We regard ESG as sources of company-specific risk, and by that I'm referring to the risk to the sustainability of a company's future cash flows and earnings. I'd note that Harding Loevner's long-standing focus on investing in quality businesses, combined with our long-term investment horizon, leads us to eschew companies pursuing unsustainable business practices. The second point I'd make is that Harding Loevner's analysts are required to explicitly consider ESG when evaluating the relative merits of a company. Harding Loevner has long viewed ESG as critically important when determining the future success of a firm. We recently expanded our assessment of corporate governance to also include environmental and social risk factors. We've done this in the form of a 38-point ESG scorecard. The scorecard contains separate and distinct questions related to environmental, social, and corporate governance risk factors. This overall score, reflecting as it does the analyst's assessment of ESG risks to the future sustainability of a company's earnings, is directly incorporated into the analyst's assessment of fair valuation. One of the things that I think is particularly useful about the ESG scorecard is that it provides analysts a common language for communication and also provides an analytical framework for consistency when evaluating ESG risk factors across a range of countries and industries. Now, just because we have expanded our assessment of corporate governance to also include environmental and social risk factors doesn't mean that we're straying from our long-standing view on the importance of corporate governance. In fact, quality management remains one of our 4 key criteria, and corporate governance is given twice the weight of environmental and social risk factors when determining the overall ESG score. I'd also note that analysts complete a separate corporate governance elimination checklist to ensure that any companies with particularly poor corporate governance are excluded from our pool of Harding Loevner qualified companies. Additionally, Harding Loevner is a signatory to the UK Stewardship Code and has been since 2012 as an expression of our view on the importance of corporate governance. Finally, the third point. Harding Loevner has a wide-ranging and diverse client base. Our clients subscribe to different worldviews, religious beliefs, and ethical systems. We intentionally avoid imposing our own or any third party's moral views on our client portfolios. For that reason, we don't consider ourselves to be socially responsible investors. However, for our separate account clients for whom we manage discrete investment portfolios, we're able to accommodate specific ESG or socially responsible SRI needs. For example, a Catholic organization may ask us to exclude any companies related to the sale or distribution of alcohol. Similarly, an Islamic entity may ask us to exclude any companies related to the distribution of pork products. Our client management team tracks these restrictions in our trade order management system in a way that is fully automated and monitored to ensure that any prohibited investments are excluded from that separate account client portfolio. So while we don't consider ourselves to be socially responsible investors, we are more than able to meet our clients' socially responsible needs. So to summarize, Harding Loevner views ESG as sources of company-specific risk. We incorporate ESG risk factors into our investment process and into the estimated valuation of a company. And finally, our clients have wide-ranging and diverse beliefs. We work with our separate account clients to help them meet their socially responsible or ESG needs in their portfolios. In fact, it's something we've been doing for over 20 years now and will continue to do so in the future.